There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion. I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we are going to share some video clips on some of the things that we have been talking about in previous video breakdowns that you all should be taking advantage of learning how to earn yield on your digital assets, playing perspectives from some of the largest organizations in the world, being the ones that are telling you all this on stage, how this is possible, how there is an evolutionary transformation in our current payment infrastructure through the utilization of DeFi. You all could be benefiting each and every single day from the income that you're earning, generating more wealth via your digital assets. If you all enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe. Make sure that you all are doing your own personal research. None of this is financial advice. I'm going to show you guys live examples towards the end of this video breakdown after we go through some of these video clips, confirming some of the perspectives from some of the largest institutions on this planet, showing you all how easy it is to earn yield on your digital assets. Now, we're actually going to start here. And again, if you're new here, make sure that you go back and you check out the yield playlist on the CYPRX platform, because none of this will make sense for the first time if you are new to the CYPRX platform. Okay, so go back to the CYPRX YouTube, click on the yield playlist and watch those video breakdowns. Now, in this particular video breakdown, I created this video about 6 days ago. I uploaded it about 3 days ago. And if you go back and you listen to this using my test account, showing you how easy it is to roll profits over from a yield aggregated platform like VFAT over to Aerodrome, earning yield on my stablecoins. In this particular video, I was earning about 19%, currently earning about 20% plus APR on a stablecoin position. In this video, I only had about $300. Every single day, I have, since making this video breakdown, to show you all how easy this is, how you can beat statistics, because in this video, we talked about how the average human being doesn't even have $1,000 of emergency money to their name to pay for emergency expenses, and how through the utilization of DeFi, you can beat the average statistic, just to show you guys how easy it is. And if we head over here to Aerodrome and we look at that same test position from about 6 days ago, I've consistently rolled over my daily profits from VFAT over to my stablecoin positions on this test account on Aerodrome. And you can see right now, this account is now worth about $558 in USDZ and about $456 in USDC. So roughly about $1,010. So within about 6 days, constantly compounding the account, rolling the profits over from VFAT over into Aerodrome, I've already in 6 days beat the average statistic. This account is now worth over $1,000 and it is earning right now about 21% APR. You can see as of time of recording this particular video breakdown, the position that I've earned on this particular liquidity pool is roughly about $2.50. Now, I know that that doesn't seem like a lot of money, but $2.50 here, in addition to adding this 98 bucks, becomes $101 added onto my stablecoin position, compounding the account, constantly earning and adding rewards onto the positions. And over a prolonged period of time, you can again use your imagination as to how massive that is going to scale. Now, I'm going to show you all that it's not me telling you guys at the end of the day that you should pick up an interest in utilizing DeFi. So we're going to start here. All right, let's go in and present screen so that way you can actually hear this particular video breakdown. And these are some of the largest organizations on the planet telling you guys that this is all possible. So let's take a second and listen to this video breakdown from 2 months ago, only has 1,000 views, and listen to what this individual representative goes on to mention about how your digital assets should be earning you yield every single day, how your income could be working for you. You can then take that income and you can go and you can spend it immediately via your yield-bearing assets. Take a second and let's listen to this real quick.
When we're talking about tokenization, you just sort of throw, tokenize it all and then it all comes out in the wash? Or how do you think about sort of the difference between some of those things? Particularly, I think, cash and debt and fund tokens.
Well, so today, if you want to take money that you earn through your income from your employer, that money goes into a bank, right? And that takes time and you usually receive it only twice a month. And then if you want to take that money and invest it in the stock market, you've got to connect your account through Plaid or whatever interface they have. and then move that money, which, ACHs and takes a day or two. And then you can trade it. Maybe there's even another day before you can trade it. So you're talking about, money coming in 2 days a month, taking, 1 to 3 days for you to take that money and then be able to invest it in the market. That's lost economic value, right? Those few days. Imagine if your income is streamed to you daily. Imagine that you can borrow against future income. Imagine that the second that you have money, you can go buy something with it. And the second you sell it, you can go buy something else. That your money is earning yield that entire time. And then, as Stacy said, imagine taking assets that are yield generating and being able to use those as payment and settlement for goods and services.
Earning yield on your assets, being able to use your yield-bearing assets and use them as payments, i.e. stable coins, right? If you really truly understand what is happening right now via the transformation of our financial system, you all will tap in. If you want to learn more about DeFi, maybe you're hearing about it for the first time, or you still haven't tapped in to the Wealth 28 Club course material, go check it out. For a very small fee, you get access to hundreds of video breakdowns teaching you all in depth how we are utilizing DeFi in the now to expand and grow our wealth. Now, if that is not enough proof, let me further my case. This gentleman on stage from one of the largest consulting firms, EY, check this out. This is insane. I can't believe I came across this. And yet again, nobody is paying attention to this. Let's look at the views on this particular video breakdown. Here at CYPRX, we're always dropping the realest gems. The CYPRX researchers in the private Discord are constantly finding these video breakdowns that not a lot of people are tapping into. This particular video has 100 views, ladies and gentlemen, and was uploaded only 3 months ago. And listen to this gentleman from EY mention how you could be earning 30% right now on your cash. Through what? Through DeFi, through stable coins, right? Take a second and listen to what he says here.
So we have another question here, but first I'm going to take advantage of my power, because I have the microphone, to ask you a bit of a follow-on question. So I've been expecting and predicting for years now that a major exchange or a big fintech firm would offer what I would call curated access to DeFi. So one of the things that I find as a user is kind of bewildering is there's a million things out there in the world of DeFi. And some of them kind of blow my mind. One of my friends was like, Paul, I can't believe I'm getting 30% return on my cash. I'm like, risk reward, that must be risky, right? But still, I want to know about it. I just want to know about it, right? And one of the things that surprised me is that no one has offered what I would call this like a curated window to say, listen, we've done the work of sorting through these bazillion DeFi options, and we have 3 deposit and 3 lending or 3 kind of collateralized lending options that we could recommend to you, right? And I'm just curious, like, is that something you've ever thought about? Are there regulatory reasons why no one has done it? Or should I immediately quit my job and go start a service that does this?
So we'll pause it right there, take an interim break. Gentleman mentioned, why, if you can go and earn 30% on your cash, should you not be doing it, right? And then he asked, are people doing it? Listen to what this individual representative responds by saying, some financial institutions are. Listen.
You can maybe join forces with a startup in Germany that were called Unlimited, and they tried that, but then they pivoted. So I don't know why it didn't work, but I don't have insights on why it didn't work. No, I think you see this in various forms. Like, I think various of the larger players are sort of experimenting with these things. I think Coinbase Wallet included.
He literally just said, I think larger financial firms are experimenting with these things. This is physical proof that you can right now go out and earn 30% on your cash. Now, I'm not particularly 30%, depending on what DEX or exchange or platform in the decentralized finance space you are utilizing, but an upwards of 30% on your stablecoins is 110% possible right now. And again, ask yourself the question, why are you not taking advantage of it? It's most likely due to fear, uncertainty, and doubt, or lack of education. And you can solve both of those things by getting educated through a platform like the one that we provide here at CYPRX, or by doing your own personal research. And it's insane the opportunities that are readily available at your fingertips. And I'm just attempting to show you guys that it's not me particularly talking about this information. The reason why I know about it is because I tap into stuff like this, right? So I've shown you all physical proof on my X profile. As you guys can see right here, I've played video clips and shared snippets from over the past couple consecutive months of large individual representatives, like, for example, this individual from Pantera Capital, who is from, Pantera Capital, $5.2 billion of assets under management as of time of making this post, where this particular representative went on to mention that they are focused on DeFi, right? On lending, on borrowing. And so just to confirm that it's not just the financial institutions embedded into the space that are mentioning that they're involved in DeFi, it's individual representatives from the regulatory space telling you all that financial institutions are somewhat taking advantage of these opportunities, right? So the reason why I'm playing these video clips is so that way you all don't think, oh, he's just trying to get me to go get involved in DeFi. No, I don't care if you guys get involved in DeFi. Don't deploy any money into DeFi at all whatsoever. At the end of the day, to each his own. Everybody has a different risk profile, but at least at a minimum, get educated because these financial institutions, what I'm about to show you next, again, if you're enjoying this video breakdown so far, smash that thumbs up button and subscribe. When these financial institutions get the regulatory green light, I'm telling you all right now, there is about to be so much money that is going to flood into this space. And the early adopters of this technology that buckled down, that did their research, that educated themselves and took advantage of opportunities will come out on top in the next couple of years. And if you're one of those individuals that's being skeptical because you're lacking education, you're doing yourself a disservice, because these financial institutions are telling you literally on stage with barely any views, so you can see where the narrative is portrayed, right? Fear, uncertainty, and doubt. When these financial institutions are telling you they're involved, you can see where their mindset is of retail traders, okay? So let's continue this particular video breakdown. I'm going to share it with you all so you can actually hear it. It's going to be about a 3 to 4 minute long video clip. I get that it's going to be long, but this gentleman's going to cover some massive things. First, he's going to talk about the trillions of dollars that are set to flood into this space. And it's the same exact gentleman that was mentioning earning 30% on your cash, Paul Brody. Okay. He is an individual representative from EY. He's, if I'm not mistaken, the EY global blockchain leader, according to this particular video breakdown. He talks about pension fund money and how when there's regulatory clarity, he sees all of the pension fund money, or at least a large portion of it, coming into the crypto space. And then he mentioned the last thing that I want you guys to pay attention to. He mentions what he thinks will create this flood after the regulatory green light is DeFi. Okay, so let's take a second and let's listen to this individual representative yet again confirm that financial institutions are interested, that they will flood in, trillions of dollars will come. And what I'm trying to get you guys to see is you don't want to be late to the party. You want to be the type of person that is an early adopter before the banks and financial institutions flood in, which again, we are presented as retail investors the opportunity in the now to do exactly that, to front run the banks. So let's take a second and listen. This is going to be, we're going to play from about 8 minutes and 30 seconds to about 12 minutes. So it's going to, it's going to be about 3 minutes long, but just listen to what he says.
Now, is it worth anything? Yes, right? This part of the conversation is called the Great Liquidity Reservoir, and I am going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion. Right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco, right? 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets, right? Not because it's going to grow, it's going to grow by absorbing, particularly on the tokenization side, it's going to grow by absorbing a lot of these other assets that are less liquid or are not currently as easily tradable. Now, today, almost all of that money is sort of locked behind the regulatory dam. And a really good example is pension funds, right? A lot of the world investors today in crypto and digital assets, they're wealthy individuals who used to be wealthy, if you bought a lot of meme coins, and sort of family offices and things like that. But most of the serious money in this world is sitting in pension funds. Like the serious cash in this world is sitting in pension funds, government funds, sovereign wealth funds, and most of those, they really cannot invest in anything that's not sort of sanctioned by a regulator. Now, don't get me started on the bizarre world that we live in where Bitcoin is too risky, but you can invest in any kind of a meme stock, right? We're not going to say that it's a perfect environment, but in general, pension funds in particular have a legal responsibility to be responsible with their clients' money. And so as a result, they can't currently, or they are just starting to be able to buy some crypto, right? For the most part, if they're investing anything in crypto, it's just in this like 3%, which is for other strategies. Over time, with ETFs, with tokenized digital assets, the percentage of this pension fund money that can show up in one form or another in this digital ecosystem is going to grow, right? And large funds will have some flexibility. They will manage their portfolios accordingly, right? And other strategies may start to grow quite a bit if it starts to include like lots of sophisticated digital assets. So most of this money, the really, really big money in the world today, is sort of behind this kind of pension fund environment. And even very modest allocations, even very small stuff, could end up being very large. Just think about gold, right? This is maybe the best crypto comparison. There's $13.8 trillion of gold out there in the ecosystem, right? There's another, real estate, art, syndicated loans. There are lots of assets today that are not particularly liquid, that are ideal candidates for tokenization, smart contract automation, that kind of thing. Right. And we've been playing around with this for a long time, but a lot of times the banks that we work with don't pull the trigger because they don't feel comfortable with the regulatory environment. That is starting to change. How quickly will it change?
I mean, so I just want to pause it right there. Okay, he's confirming financial institutions will come into this space once the regulatory environment changes hands, right? And he's talking about trillions upon trillions of dollars. Now, he mentioned 400 trillion. He doesn't see it all coming into crypto, but a large portion of it coming into crypto. He confirmed right now on stage 3 months ago. We are early, people. This video has 293 freaking views. I mean, wow. Let's continue and let's listen again till the part where he mentions DeFi, because I want you guys to get your head around the fact that these financial institutions, one of them start earning 30% on their cash. You don't think all of them are going to be earning 30% on their cash? Now, I don't think in the future we're going to be able to earn 30% on our cash, but do I believe 10%, 12%, 15% on our cash is possible through DeFi? Absolutely, in the near future. And right now, they are offering, certain platforms in the DeFi space are offering 20% plus on your stablecoins, which is phenomenal. You cannot find that in any traditional investment.
Is a different question. And again, if you know me, I love looking at historical precedents. And a good one for this is the shift that took place over years when public pension funds and private pension funds started to put money in stocks and bonds. Right? If you go back to the 1950s, right, and fortunately we can't, but if you get data from the 1950s, you can go back and you can see that, in fact, at that time, even stocks were kind of considered risky, right? If you were a proper pension fund, you had your money in bonds, probably just government bonds. Over a period of about 40 years, the entire universe changed, and so that the majority of pension fund assets today are actually in stocks, not bonds, right? And so I am not here to argue that 40 years from now, the majority of pension fund assets will be in crypto. I think that is extremely unlikely. But I am here to argue that whatever amount is in crypto and digital assets, it's going to take 40 years. There are some pension fund managers out there who are already buying Bitcoin ETFs. They're excited about it. They want to buy digital assets. There are others who are like, no way, right? There's a pension fund in the Netherlands that's performed really well for the last few years. They have something like 15% of their assets in gold. Right, but that's probably atypical these days compared to, say, the way things were 40 or 50 years ago. So it's a long cycle, but big shifts do happen over time. And in general, it's pretty typical that these shifts take 20, 30, 40 years, even if the technology and the product is available. So I think there will be a couple of knock-on effects as we go forward. And the first is that although crypto is having a great year, there's a couple of things I would expect to happen. Number one, DeFi. So DeFi is a little bit down, right? But I think it's coming back, and I'll talk a little bit about that. And then the other is industrial applications.
All right, so I'll pause it right there to save time because we're already going on 18 minutes. He mentioned that one of the things that is possibly going to bring back lots of this liquidity into the market, or a return, an improvement in this market, is DeFi, okay? And so I cannot stress enough, these financial institutions, these large organizations, they are tapped in. They're embedded and focused on DeFi. I've now shown you multiple examples, on-stage examples, right? Institutional investment organizations on a panel discussion talking about DeFi, right? Large consulting firms talking about DeFi and trillions of dollars coming to the space. I'll save time, all right? I won't go through this particular presentation on rolling over the income from the VFAT platform over onto Aerodrome, just to save time, because we're already at, about 20 minutes in this particular video breakdown, right? But again, I have step-by-step video breakdowns on how to do this, A to Z videos, going over a detailed perspective on what DeFi is, how to get involved at a minimum, right? You guys, educate yourselves. There's nothing wrong with taking advantage of educating. You don't have to go out and deploy your capital. You don't have to go out and take the risk, but at least educate yourself. As a matter of fact, you're taking more of a risk not educating yourself than, educating yourself, if that makes sense. Okay. So many blessings to you guys. Hopefully you all enjoyed this video breakdown. I'm always trying to bring you all the realest information, perspectives from some of the largest industry participants on the face of this planet, This isn't just coming up from the top of my dome. I sit here hours upon hours every single day, and I do this research to display it to you all for the individuals who are willing to take advantage of the opportunity in the now, because there are so many. The opportunity right now that is among us as manual retail investors is a once in a lifetime opportunity. So do your research, join like-minded communities, get educated, take advantage of opportunities when they are available to you, and don't sleep on this massive transformation. As always, many blessings to you guys. Be cognizant out there. Be aware. Again, I'm not telling you guys to go out there and just jump into DeFi positions and start earning yield on your assets. That's not how it works. You need to take an educational and a mature approach. You need to lay the foundation first. Here at CYPRX, we've created an educational platform for you to tap into. If you want that, visit cyprxtrading.com. We'd love to have you on the team. And if not, and you just want to continue down the rabbit hole of our free information, do us a favor, smash that thumbs up button, subscribe to the platform. It does help this channel grow, and we do appreciate the love and the support. With all of that in mind, I will see you all in the next video breakdown.